We have another series of stars coming in for the next session, which is market expansion through new products, channels, and initiatives. I think new products is clearly the key point where a lot of good and a lot of bad can happen. In the name of innovation, a lot of bad things have happened through the introduction of toxic products. But the same new products, when analyzed or seen through the eyes of the consumer, sometimes they work very well. I would like to call the next panel, Ajit Menon, EVP, Head of Sales at DSP BlackRock. DP Singh of SBI Mutual Fund. Kailash Kulkarni, L&T Mutual Fund. Karan Datta, Axis Mutual Fund. Sunil Subramaniam, Sundaram Mutual Fund. Swaroop Mohanty, Mirae Asset. And Rajan Krishnan will moderate this session.
You want us to sit in any order? Any order. Did you switch on or no? No, there is no. Remote control. Centrally they will do it. Yeah. Good afternoon. I think it was a very interesting session just before this, and what I thought was very interesting was that actually this session that we have with these very senior sales and marketing people is actually flowing in from a discussion on market expansion, albeit in a slightly different way. So welcome to this session on trying to expand the mutual fund pie, which is really the theme for the day. And with me I have a very eminent panel of very, very bright and experienced and young mutual fund practitioners. And what we'd like to get out of this session, or your expectations honestly, should be to hear about what's going on in the minds of mutual funds, about how the whole mutual fund size or the mutual fund industry can be increased. It is a very important thought that is passing through the minds of all those who have a stake in the mutual fund as to how does this business grow, because whichever way it grows, I think the beneficiaries are all of us sitting here, and it'll be interesting to use this as just as a sample. I mean, there are 6 AMCs represented here, which would give you a sense, and there are a diverse set of AMCs with different backgrounds, different experiences, different structures and all that, which should give you a good sense of the way the industry is thinking about how it takes the mutual fund business forward. Let me assure you, I mean, all these people who are sitting with me probably spend almost all their waking hours and probably some of their sleeping hours thinking about this topic that we have today, which is how do we expand the mutual fund business, whether it's through channels, whether it's through products, it's through initiatives, it's a combination of some of these. So just to warm up into this session, what I would request is that each of them just quickly talk, maybe a minute and a half, about what they in their mind see as probably the most important area in which, or the direction in which their fund house has been working on, or they feel that the industry should be moving in, which will help grow the size of the mutual fund industry. So maybe with Swaroop, we can start.
Good afternoon, everybody. My name is Swaroop Mohanty. I represent the sales function at Mirae Asset. I mean, when we looked at the topic and it gave us a good time, or sort of gave us a good thing to reflect on what we've been doing or what we've been trying to do as, what can I say, propagators of this wonderful product. Recently, I've been fortunate to be in the Amphi AGM. We just completed the 18 years of Amphi AGM, and there we were requested to start behaving like adults since we crossed 18. And from that perspective, one thought which came into our mind was, what can I do? Or what have I been doing? And that's a debate we have within our sales team here at Mirae Asset. And one thing which was very pertinent is the state of the industry as it is, the state of investors as it is, and I don't want to go very deep into that. The fact is, when I realize on a 15-year, 20-year horizon, the NAV seems to be traveling on a triple-digit path. But when I come and talk to you, do I show you that path of my NAV going to a triple-digit form or more than a triple-digit form? I speak on the equity part right now, and I would like to restrict to equity as I speak. So when I reflect on that a little deeper, I feel at this moment, and that's something which we would like to practice for the next whatever time it takes, the need of the hour is not product innovation, but the need of the hour is product conviction. We don't seem to be convinced with our own product. We don't seem to be convinced with the fact that this product is a brilliant product, though the figures are showing that it's a brilliant product. So it's a time to fall back on your core. And when you look at the core of the product basket, the diversified equity funds seem to be doing phenomenally well. And the products seem to be growing more attractive as the years go by. So what we would like to bring to the table is conviction in ourselves when I come and talk to you, and on behalf of my team, when we come to you, we would like to show you the path that our NAV is definitely on track to become a 200, 300, 400 sort of NAV going forward. Now, if I talk to you as a manufacturer, I'm sure the advisors will take the cue, and once the advisors take the cue, the investors follow. It's the need of the hour that the investors start making good money from our products. The products seem to be delivering, but the investors are not. So through the product, through this change in communication, our endeavor would be to see that investors start making money, which is long overdue.
That's, I think, an interesting way to start, and which is not just about saying new product, new channel, but have more, more conviction behind what you're trying to sell. So thanks, Swarup. Ajit?
Thanks, Rajan. Thanks for the opportunity. I think from the perspective of DSP BlackRock, if we were to talk about how do we define this challenge, I think a lot of us, tend to just get into large generalizations, and I think that's where a lot of us sometimes end up making mistakes. And the point that I'm trying to make is that you could define the problem in multiple ways. I can start saying that the challenge of growing the mutual fund pie, for instance, in the context of 568,000 villages, 619 districts, 1,618 languages, 6 ethnic groups. You look at the complexity of India and you'll realize that it's not an easy task. But at the same time, I think the perspective that we at DSP BlackRock have been wanting to do and have been doing is that let's first recognize, and I think this was mentioned in the earlier panel by Saurabh Mitra as well, is that you've got to be very clear, both as a brand, at the brand level, as well as at the industry level, as to what is it that you really want, what is it that you stand for. And at DSP BlackRock, I think what we're saying is that we cannot be everything to everybody. I think the mistake that we all tend to make, even at the distribution level and the advisory level, I know that this is a challenge that everybody faces. You want to take every customer that comes your way. So you want to be everything to everybody. That's just impossible. So you play to your strengths and you figure out what is the segments that you want to be in.
No, but Ajit, does that mean that you're trying to actually restrict the market? Because, I mean, if you're talking about expanding, and you start saying that each group of people, whether it's a fund house or a set of distributors, start to focus on one core.
The job of expansion and what goes into expansion will be multiple things. So the way that we've been doing it, for instance, to be pointed about it, is that we think the route to do that is to try and help our advisors and distributors grow their business. So the route that we've been taking is to empower distribution, independent financial advisory space, with tools and with as many value additions that we can do. I think my mic's conked off. But with any value additions that we can do, which will help them grow the business. And I think that's the route that we'd like to take to grow the pie.
Okay, fair enough. DP, what is your experience about
Good afternoon, everybody, and thanks for giving me an opportunity. We at SBI Mutual Fund are very, very clear about this thing, that simplicity of the products is going to be the mantra. We need not have new innovative products, especially when we are talking about expanding the market. There's a huge, huge potential, and we need to reach out and to start with sell the very, very simple products, to start with the liquid funds and to start with very less volatile products. And today the challenge is not of expanding the market, rather retaining the market. We are losing lakhs of folios on month basis. How to retain those and how to get more people on board. And technology has to be exploited at the maximum end. And today most of the fund houses, rather all the fund houses have their applications. Today when millions and millions of people are using mobile phones, why can't they use the technology for investments? So, but we have to make it simple, simple product, simple usage. If we are able to provide servicing, if we are able to provide good products, simple products to start with, we can definitely do much more in times to come, and maybe in 1 year or 2 years down the line. Maybe if all of us put together our heads and start getting more number of investors in the industry, I think that will be the only way to expand the market. We should not look only at the existing investors. Most of the strategies of the industry today is how to serve the elite. How to, but in India, where a lot of people are there, everybody and anybody who is in the higher tax bracket is our customer today, is our potential customer today. How to reach out to them, that is a challenge, and that can be done with lot of technological innovations happening in the banking sector. I think that is what we feel in SBI Mutual Fund, that we should be able to do that. Rather than looking at getting more and more people in equities, first and utmost thing is how to get them in the industry itself, how to get more folios. That is, I feel, is the biggest.
Thanks, DP. I think what the left side of the panel is clearly, I think, veering towards is simplicity, keeping, staying to the core competence rather than looking at, more groups of investors or distribution, or like, the earlier, the Mirai experience of saying we need more conviction behind what we say. So I think, contrary to what one would have imagined, I mean, at least the three speakers who have spoken haven't said that we should have 18 new products and 14 new channels and things like that. So that's an interesting perspective. I don't know what the right side has to say. Maybe Karan, if you can have a go.
Since I'm going to start the right hand side, then let me start by saying something controversial, which I think I'm making a habit of. Let's just step back and see, like, who are we to say that investors who put 60 lakh crore in bank deposits are uneducated, and that they need to get educated to invest in mutual funds? Who are we to say that? Because even after 20 years, we've built about 1,50,000 crores of retail assets. So I am coming to the foundational structural issue of what our investors, of what India is trying to tell us and what we're not trying to listen. Investors shout and tell us that they hate volatility and they love predictability, and in the AMC business we don't tend to hear them very well. So I think foundationally the point I'm just trying to make is that investors hate volatility, they love predictability, and the only way to address this is to give a ride which is less violent. As long as, so either you do it or AMCs do it. Just give me a second and I'll try and explain that. So either all of us on sitting out here start launching asset allocation products, or all of you sitting there only start doing goal-based selling. There is no third alternative in my mind. So it's a lot of responsibility on either side, because the investors are very clear that their ride has to be smooth, their ride cannot be violent, their ride cannot be volatility driven. So my message to this panel and to a lot of what we do at Axis is launching actually asset allocation products. And to you would be that goal-based solutions, or trying to at least start thinking on packaging objectives, goals, rather than selling products. That's the only way to go. I can't think of any other thing.
Thanks, Karan. Kailash, what are your thoughts on
Good afternoon, everyone. And we are relatively a newer kid on the block as compared to the rest, with L&T Mutual Fund now coming into the notice of the people. I think we really want to keep it simple. I think that's the mantra which we are trying to follow. The three things that we believe, or at least what we have tried to do in this short period of time, if we reflect back to one of the sessions where Loai actually said that you need to get people in maybe through a liquid fund, let it ride on it, keep it for 6 months, tell him that this is your safety net, that you had given it to me for 1 month, and then move him into some other product category. We understand that the people sitting in front of us may not want to necessarily sell a mutual fund to a retail investor because it really does not make sense to him from a remunerative point of view. So what we have done, actually brought out a solution. Everybody is happy selling SIPs. I think SIPs is a very simple mantra which everybody has done. And we've actually launched something called a multi-scheme SIP, wherein when you're selling the equity SIP, you can also collect a liquid SIP in the same form. So there is no incremental effort that you have. And thus what we are trying to say is that move part of the person's money into liquid assets which are safe, which will give him better return than that which is there in a savings bank account. And that's how he will hopefully over a period of 9 months or 12 months be more comfortable listening to your advice and moving that money into debt or equity as the case may be. So that's something which we have done. The second thing for growing the market, and actually what we would love to do is, can we get the next 1 crore investors into the market for us? And that's going to help everyone. It's not going to be L&T Mutual Fund, it's for everyone. Is that we all talk of simplicity, we all talk of communication which should be in the regional market. But how many of us actually have communication which is beyond English and Hindi? Very, very few of us have it. So what we have done is we've launched a new investor education initiative, and if you go home tonight and you log on to YouTube and do lntmutualfund.com, we've actually launched 5 short films in 6 regional languages. 5 regional languages including English, so totally 6 languages. So you got Bengali, Hindi, Tamil, Gujarati, Marathi and English. So that's something, and these are not films which are talking, no technical terms are used. It's absolute simplicity, the message that we are trying to give out. And the idea of this is to ensure that tomorrow, if the distributor who say in Madurai wants to get another 100 new people into the industry, he can send the Tamil link to those people and they can see it in Tamil. The person sitting in Rajkot can send a Gujarati link. So the objective would be to really try and get more people on board and pass the message on to as many people as we can. So that's what we are following.
That's interesting, because I think the multi-language, we always, English is a language of choice, for most of us in the mutual fund business, but you realize that it may not be the language of choice for the investors. And to that extent, I think it's important to be able to do that. That's an interesting perspective. So Sunil, Tamil he was talking about, so maybe you have something coming from
I'm not going to bite. Thanks, Rajan. Karan actually set the base for me, and he said he's going to speak something controversial, right? And I think I'm going to outdo you, Karan, in this. Because to me, 2 things are there. One is that I think the formula, that is the question that is framed, is missing a key word in it. He talks about expanding the pie through products, channels, and initiatives. But I think we're missing the point. And this is an existential issue for the industry. Okay? I think we got to remember that we are in the job of providing solutions to investors. Products, channels, initiatives are only methodologies to deliver, unless we think of ourselves as a solution provider to the investor. And for providing solution, you got to understand customer needs. And that's where the second issue comes in, right? Investors are broadly driven by emotion into putting money, right? And at one end, you have 2 emotions which drive people's decisions, right? You have fear and you have greed. For some reason, our industry has painted itself into a corner of only catering to the greed segment of the population, whereas the bulk of the money, and that's what Karan mentioned in terms of bank deposits, right? Ajit also mentioned it in terms of the number of banks in the country. Everybody's money is preferentially put into bank deposits. Why? Because the need for safety is paramount in the investor's mind. So for us to grow the pie, right, unless we think of addressing that segment of money which is going into where the investor is getting what he wants. So unless we redefine ourselves as an industry, as a solution provider to the savers, the real expansion, I mean, you're hoping to expand the greed pie and cater to that, but that's going to be self-limiting, right? As long as you have asset classes like real estate and gold, which over a long time have been providing fantastic returns, you're fighting along with them in the asset class. So I think the key is existential. First is we got to redefine ourselves as a solution provider. The second is we got to clearly identify that the savings pie, and once we do that, all delivery has to be through channels, right? So to that extent, anything that we talk about, channel is paramount, right? And if you then define it that way, I think all of this B15 going behind getting new customers is stage 2, stage 3. Stage 1 is for every one of the distributors in this hall to expand the wallet share of your customer. That is the best way to expand the product. Each one of your instruments, right? And we have an instrument like that in our liquid funds. Yes, occasionally the July 15 happens, you make negative. So the key then is, how do you make the retail investors capital protected in a liquid fund? You have a 200 basis points kicker in the worst of times over a savings bank in the liquid fund, right? The issue is, once in a way this can happen. We don't have a check writing facility. That's something we need to work with the regulator. But if we can use the liquid and somehow build in capital protection for the retail investor, either it's through insurance, insuring it, through deposit insurance corporation, we go into somewhere. So I think the way we at Sundaram, and so what we have started thinking, and in that terms of influence, is first of all redefine our business. We'll stop talking about investors, purchases and redemptions. We'll start thinking about our business as deposits and withdrawals, just like a bank does. So your systematic investment plan should actually be called a systematic savings plan. So we should start positioning ourselves in the investor's mind as the savings solution provider. To me, that, and that's Sundaram, that's why we are working along.
No, I think it's an interesting, thought. But see, from my perspective, I mean, when I was asked to moderate this group, I was anticipating, given that all of you are sales and marketing people, that I'd get these quick fixes, in the sense that this is what we should do and the industry will grow by 15% in the next 6 months or something akin. I'm disappointed at one level, but I think I'm also extremely happy to note a certain maturity that is there in this group, as well as probably reflects that as far as the industry is concerned. But even then, my concern still stays, and from all that you've said, isn't there still a little bit of an urgency to grow the business? Because now we are talking, I think, after maybe 3 years of not a very healthy situation from a pure numbers perspective. I mean, numbers have been dropping. So do you see, as a group, as individuals, that there is a need to be a little bit more urgent to stem the rot, so to say? You're talking about redemptions on a regular basis, to stem that and to do it. Because all that you've said, I cannot disagree with, and I think they have to be addressed. But I can't see any of them, changing anything overnight. I really also personally do not know if there is anything that can be changed overnight. But I'm just posing this question to this group to say that, is there something that when you're thinking about expanding or growing the size, that can bring a little bit more urgency, a sense of saying that, okay, in the next 6-8 months, we can start to see a turnaround. I mean, any of you can just take it from here and then.
Rajan, just note a little bit of a different point than what we would actually say. It's great to look at 3 months, 6 months, and can we grow the market 15%? I think today what's happening in the market is that the investor's confused. You've been talking to him of long-term investments in equity, and he's seeing 5 years not really giving him great returns. The issue is that if you are going to go with new creative ideas to him to try and grow the market by 15-20% over the next 6 months to 1 year, possibly you're sending more new messages which will confuse the investor further. I think hence, somebody did mention on the panel, it's a little bit of back to basics, but yes, it needs to be much more deeper than just address the existing 2 crore investors that are there in the mutual funds. It goes to the next level, and I think a lot of people talked about, can we look at packaging it in a different manner to address the savers? So there is a whole host of investors who have tasted mutual funds, but can we go beyond that And I think that will grow the industry by that 10-15% over the next 6 months, 1 year. But if you do something radically different and confuse, there is a chance of creating more confusion in the minds of the retail investor.
So if we take it from there and say that, initiatives, channels and products are delivery mechanisms rather than at the core. Where do you see, assuming that, all that you said is really at the core. In fact, most of you have been consistent in that.
Maybe I can
Just, to take it into specifics.
Well, maybe I can just share with all of you that this whole story that I'm talking about, or all of us are trying to talk about, asset allocate, etc., does it really work? It works. It works. For whatever it is worth, I'm going to share some statistics with you. In our own firm, we've added 150,000 folios in the last 10 months. Now, you can always argue that that's immaterial, it's not very large, over 10 months it's nothing. But in just contrast it with an industry which has lost 15 lakh folios, if in pure asset allocation funds, in something where there are bundled solutions, if we've added 150, kuch to theek ho raha hoga. And that is, I'm not trying to promote anything out here. I'm just trying to get the thinking going that, boss, the investor is not asking for superlative numbers. He's just asking us to be there and thereabouts. And we're so caught up in life about being the best performing asset and the best performing asset management company. It's of no relevance to the life of the customer.
See, Rajan, from a point of view of a quick fix, and you wanted an immediate result thing which can help expand the pie, I'll tell you one single thing which, if SEBI can permit us to advertise and publish a band of indicative yield on FMPs. So if you have a product which is a disintermediation product, we know that FMPs are giving better returns than bank deposits, but it's all hush, hush. How do you go to a retail investor and tell him, this is a product, it's a portfolio, jo bhi milega, milega lav paisa, right? So I think and as it is in our equity schemes, we write now past performance cannot be guaranteed, so say that this yield cannot be guaranteed, but if the regulator can say, okay, give her 25 basis points this way, that way, put an ad in the paper and say fixed maturity plan, investing in bank CDs, 10.5 to 11.5. People will then realize that there is a product which is giving better than his bank deposit. Today you're dependent on the channel to go and call the district. So he will only talk to the HNIs because it has got to be worth his while. So if we can do this, right, then FMPs as a classical example of bank deposits, safety for safety, go into bank CDs. It's the same asset class, right? He's taking bank deposits, it's the equivalent of bank CDs. So quick fix, if we could get the regulator to allow this.
Is it a thinking, and I'll check on this side.
I agree with sir, but thing is, if we talk about the regulator, then there are so many things. If we go beyond that, what is the biggest irritant? What is the biggest irritant today to get an investor? The KYC is the biggest irritant. So if we talk about FMP, we have to talk about KYC, we have to talk about overemphasizing the risk in each and every advertisement. When the liquid product, we have to write it's a risky product, subject to market risk. There are so many things. Now, if we talk from the industry point of view, as it is kind of situation, what is the action? The urgency is to get more and more number of people. And we have to, we as an industry, as a R&D agent, if we can do something that KYC is made little easier, if we can do some group KYC thing which can be done.
No,
if we
are able to do that, the bank does a KYC and we take all our money through banks. So why duplicate KYC?
No, actually, this discussion may not go very far because, it's been, I think,
regulatory level,
this is something that has been brought to SEBI's notice over many years. We've not really progressed.
Just to put things in perspective, let's face the reality. The reality is that we are in the business of financial advising. And financial advising worldwide is one of the most disciplined and boring things to do. The more boring you make it, the more money you make. That's the reality of our jobs. Our job is not to bring excitement to anybody every day. Our job is to create wealth, and that is a very powerful thing that we do. So when we look at it in perspective of what's happened in the industry in the last 15 years, we definitely have fantastic products delivering whatever the investor would have dreamt of. The sad part is when you look at the surveys which are going around, the investor today finds it riskier than equity as a stock. And that's where we are getting stuck. Forget market expansion, like Mr. Singh rightly said, it is now market consolidation. We've got guys leaving us as if there's no tomorrow. I still don't associate, and sorry if I'm being a little upfront, this whole concept of profit booking in mutual funds. You've hired a fund manager to book profits for you. Then you go around and do the profit booking, and I firmly believe that if you go back and look at the last 15 years of advising, selling, or whatever we say, every redemption in diversified equity fund is wrong unless there is a need to that redemption. You check the NAV at which you've redeemed and check that particular NAV today, and you see the answer for yourself. And that's something which we need to be asking ourselves. Are we convinced with the product? Are we here for multiple gains, or are we here for percentage gains? If we are here for percentage gains, my personal opinion is it should be in the bank where it belongs. We are here to create substantial wealth for our clients.
If I may just bring Ajit into the discussion, because while I think this is quite interesting, I also want to just touch upon one or two issues like new segments, and I've been from the outside seeing a lot of work that DSP has been doing to address the women investors. Now you can argue 50% of the world are women, so why have they been now suddenly brought in? I mean, is it something that's working? I mean, is it something that everybody as an industry should address? So it's interesting to hear from. It'd be interesting to hear from you.
Yeah, Rajan, I think this goes back to what I started with, which is that in any business, whether it is from an AMC's perspective or I think for anybody in the audience, you just cannot be everything to everybody. And one of the key things that we've been trying to bring into our discussions with advisors and especially independent financial advisors is that you need to have clear segmentation around the customers and clients that you have, so that you're able to match the level of services that you provide, your strengths, with the client that you service, rather than trying to have anybody and everybody into your pool, because that really takes away energy. So for us, we looked at women as a segment and said that is there as a manufacturer something that we can do about it. We started off with a survey, obviously, which Nielsen conducted for us across about close to 5,000, about 4,800 women across 14 cities. And well, the facts were something that were more intuitive in the sense that it's only 23% of working women who actually even decide anything to do with their investments. In the non-working segment,
just last point, and then we take questions.
In the non-working segment, really, it's just 10% of the women who do it. But what was interesting to note in that survey was that 63% of the women wanted to know about investment products. And I think that's an opportunity. So whether it's an opportunity for everybody, again, clearly an opportunity for women advisors, because there is a lot of similarity, empathy that they can bring into the conversation. So the limited point being that we've got to remember that while we are talking macro, at the micro level, it's really segmentation that you need to be really concerned about. And to the sort of earlier discussion that we were having in about increasing the pie, I agree with what most of the panelists said. I'm just reflecting back to something I heard Devdutt Patnaik speak, at a very recent seminar that I attended. He said, you guys, he was addressing advisors, a group of advisors as well. He said, you know what, you guys are all running after Lakshmi. And he's big on mythology, right? He said, you're all running after the goddess of wealth, which is Lakshmi. Please understand that your clients are running after Durga, which is from Durg, which is safety, right? So you're trying to push equity products to somebody who's looking for safe fixed income products. But he ended very well, saying that the route for both goddess of Lakshmi, the goddess of wealth, Lakshmi or Durga, is going to be through Saraswati. So you better get your knowledge quotient up first, both for your investors and yourself.
Okay, I think what I've actually gathered from hearing these gentlemen speak is that I think there is a whole need to go back to the basics. I think the whole sex around equity and all that is to be forgotten now. I think it is important to get more and more customers into the fold, and if it be through FD-like products, advertised FMPs or liquid funds, as you were saying, and things like that. I think that's really, or asset allocation, etc. I think that's really the most important thing to do, and I think the delivery mechanisms will hopefully follow. I mean, if DSP discovered women as a route to do it, I mean, there could be other opportunities that the industry as a whole or individuals within the industry can find, which is which is at the core of their business. So I think it's been an interesting. I was very sure from the beginning that 45 minutes is actually not the kind of time that could be very fruitfully used. But I'm glad that a discussion has started. Maybe some of you can take it back to your own respective businesses, offices, and there could be more such discussions going forward. So I'd like to thank the participants and maybe leave the floor open for a couple of questions, because I think the bell has been ringing. No questions? Okay.
May I call Sadiq, please?
He's
okay. Yeah.
Maybe 2 or 3 questions max.
मैं जिग्नेश शाह सूरत से। मेरा क्वेश्चन है कि आप बोले कि बैंक्स में 70 लाख करोड़ का एफडी है, वो पैसा म्यूचुअल फंड में क्यों नहीं आता है? तो उसका जो हम रूट में काम करते हैं, तो हमारा हमने जो आंसर पाया वो है कि कोई भी म्यूचुअल फंड के पास बैंक जैसी प्रोडक्ट नहीं है। वो कैसे? आप जब भी डेट फंड की बात करते हैं, या तो लिक्विड की बात करते हैं, या तो 1 साल के डेट फंड की बात करते हैं। जब इन्वेस्टर का पैसा है 5 साल 10 साल का, वो 5 साल 10 साल तक बैंक एफडी में पैसा रखता है, तो ऐसा कोई भी प्रोडक्ट कोई भी म्यूचुअल फंड के पास है नहीं, तो पैसा कहाँ से आएगा आपके पास? तो पहला क्वेश्चन है, तो वैसी प्रोडक्ट बनाइए जो बैंक के पास है, जो इन्वेस्टर को चाहिए। हम क्या बोलते हैं कि हमारे पास ये प्रोडक्ट है, आप जाके वो बेचो और उसमें पैसा लाओ। हम बोलते हैं कि हमको ये प्रोडक्ट चाहिए, आप वो लाओ तो हम पैसा लाएंगे।
नहीं, आई थिंक द पॉइंट इन दिस ग्रुप इज ऑल्सो सेइंग कि या तो हमारे पास जो प्रोडक्ट्स हैं उसको और एफडी जैसे मतलब प्रमोट किया जाए, या एफडी जैसे कुछ प्रोडक्ट्स डेवलप किया जाए जो शायद आज नहीं है।
मैं इनको जवाब देखो, आपने बोला 70 लाख करोड़, 70 लाख करोड़ सिर्फ एफडी में नहीं है, सेविंग सबसे ज्यादा पैसा सेविंग बैंक, करंट अकाउंट या शॉर्ट टर्म एफडी में। एक मिनट सुनिए,
म्यूचुअल फंड से तो ज्यादा है ना।
1 मिनट सुनिए। तो उसमें जो पैसा है, उस पैसे को पहले आप 5 साल का प्रोडक्ट नहीं है, पर अपने पास 3 महीने 6 महीने 1 साल का प्रोडक्ट तो है, तो 40 लाख करोड़ तो कम से कम उसमें है जो 1 लाख 1 साल वाले डिपॉजिट में पड़ा हुआ है। आई विल गिव यू एन एग्जांपल। एक B15 सेंटर में एक डिस्ट्रीब्यूटर से बात किया कि आप अल्ट्रा शॉर्ट टर्म में क्यों नहीं लेके आते, और उन्होंने एक एप्लीकेशन जो MVC हमारे SB म्यूचुअल फंड की है कि आप रिडेम्पशन, स्विच ओवर और इन्वेस्टमेंट बाय सेंडिंग SMS कर सकते हैं, और म्यूचुअल फंड्स की भी है। तो उन्होंने 1 महीने में 125 इन्वेस्टर लेके आए हैं सिर्फ अल्ट्रा शॉर्ट टर्म फंड में। और उन्होंने जब बात हुई तो हमने कहा कि 5 लाख का कम से कम फोलियो हो, तो वो कहने लगे कि नहीं कम से कम 2 लाख रखिए, 5 लाख ज़्यादा है। पर एंड ऑफ द डे हमने कहा चलो कुछ भी नहीं, आप कोई भी लेके आइए। 1 महीने में 125 फोलियो लेके आए हैं छोटे सेंटर में, और सबको साथ में मोबाइल एप्लीकेशन का बोल दिया कि उनका 8 करोड़ रुपया आया है 1 महीने में, कि आप सिर्फ SMS का, जब वो निकालना हो तो SMS कर दीजिए, जब और इन्वेस्ट करना हो तो भी SMS कर दीजिए। Now simple, by providing a simple application, he has been able to bring 125 folios. If all the distributors start replicating like this, getting investors in other firms, why can't we do it? And this is all that money which was lying in saving bank or short-term deposit.
ठीक है, लेकिन हमको बैंक एफडी का ऑप्शन चाहिए।
Yeah, we'll take this offline. Maybe one question here. Last question, I think.
This is Guru Shankar and Karan, Kailash. A small suggestion, because since we were talking about product, channel and initiative, we have seen that most of the clients and most of our friends sitting here, we have been advising our clients on various asset allocation products, and of course we do also have a lot of products there. But if you look at Indians per se, you know that they are doing maybe unknowingly they are doing asset allocation. You go to a retail customer or you go to an HNI, they have got gold, they have got properties, they have got fixed deposits.
So what's the question?
So coming to the point is, if we are going to start something different or think differently, a small suggestion for an initiative is, if for a liquid fund, if we are promoting that as an alternative to a savings account, maybe we have a passbook or a savings separate statement where it indicates to the customer this is also another saving bank account where you can save money and it could be having a better return. So maybe a first step towards that initiative could bring more awareness that there is another alternative for a savings bank account.
Absolutely, and the deposits and withdrawal point that Sunil made was fantastic.
Okay, this is absolutely the last
small point, not to the panel, to the audience. I have a simple question to all of you. If you look at the Amphi site, there are 428 folios in mutual fund, Indian mutual funds, 428 lakhs. I have a question. Why only 2 lakh folios are there in liquid fund? Why? ask for a check writing facility and have 50% folios in liquid, you will have US industry. Their 23% folios are in liquid fund. Panel asked for a FMP with a range of returns. What if you fail to give that returns? Do I have a capital protection? You don't have. We are not bank. We are different from bank. Give the safety first. Make people understand what liquid is, then come to the equity. Indian investors take mutual fund as a synonymous to equity, and this is the mistake which we have done. My question is to you, not to the panel. Thanks.
Thank you. Thank you, gentlemen, for taking your time out for this. Thank you very much.
Will the panel please hold on for a minute? Sadiq, can you?
1 minute extra.
Thank you. So coffee waits for you outside in 15 minutes. Thank you.